No surprises from the Federal Reserve, the central bank keeping rates unchanged. Joining me today is Frank Holmes, CEO of U.S. Global Investors. Frank, welcome back.
Good to be back.
So no surprises here. The Fed has kept rates unchanged. Gold right now is little changed and markets are up slightly. It seems this has been largely expected. No surprises here.
You know, usually this time of year, it goes through this correction and it falls below its 50-day moving average. And it's done that again. And we get ready for June is usually between now and June is the trough in that sort of the second part, the love trade comes in with all the holidays, religious holidays, wedding seasons in the second half of the year.
And let me ask you, Frank, just focusing on monetary policy here. Some analysts I spoke to have said that the current monetary policy is too aggressive, that rate hikes coupled with the balance sheet unwinding is too hawkish. How do you see it?
Well, I see that they're going to have lots of difficulty with rising rates, and the coupon they have to pay on interest is just going to become more and more expensive. And that gold has to all of a sudden resolve itself to trade higher to offset it. What I think will happen in speculation would be Japan, where you can borrow money still at 5 basis points for 10-year money, not hitting 3%. And the same thing in Germany and Europe. It's just cheap, and gold is a great investment. And the demand is going to slowly grow out of those two parts of the world.
So what do you really feel it will take for gold to move out of this range? As you know, Frank, we've spoken about this, that a lot of investors are frustrated with the metal right now.
Yeah, they are, and it has a lot to do with the stronger dollar. And I mentioned this before, the relative interest rates for 5, 3, 2, and 10-year bonds, the US dollar, it just looks more attractive. But I think the issue is going to come in the second half of the year when we start dealing with higher interest charges, and this monetary supply is still so great. So I think that's going to be the tipping point. But right now, it's just normal May doldrums for gold.
Right. Well, let me ask you, as Frank Holmes, the investor, I know you are invested in gold as well as the crypto space. So will this cause you to focus more, perhaps, on cryptos right now?
No, I think I have to take a look at all our different asset classes we manage, from tax-free to equities, China to Eastern Europe. And I think that's what we have to do. But the digital world, the digital currencies world has rebounded since April the 15th, 17th tax bottom. And I think it's trying to surge higher, but it's going to have to deal with the G20 countries coming out with policies, the finance ministers with policies for cryptocurrencies sometime in mid-July.
All right.
So I think between now and then, it's just going to be sloppy. But remember, for all your listeners, the daily volatility of bullion is 1%. S&P is 1%. Crypto digital currencies is 6 to 7%. So they're much more volatile.
Yes, important to take note of for sure. Frank, thank you so much for joining us immediately after the Fed here.